Fear not, chuckleheads. Together we're going to face the future, the light that is our destiny. Welcome to the next level. Welcome to the awakening.
Welcome back to the 59th episode of the RunToGold.com podcast. I've got some exciting news. I'm headed down to South America again. I spent quite a bit of time down there, and hopefully I'll be seeing Doug Casey's La Estancia de Capayete in northwestern Argentina, along with touring around Bariloche and spending some time in Buenos Aires. So it's going to be quite a fun trip for the month of December. I think it's important for everybody to have what's called a last plane account, which answers the question, if you have to take the last plane out of your country, where do you go and how do you maintain your standard of living? And if you're location independent, if you're geographically diversified, then you can go and take a month and go somewhere, and it doesn't really interrupt your ordinary day-to-day transactions or life or whatnot. And I think that that's an important aspect to have in your preparation plans. So while I don't expect anything crazy to happen during December, at the same time I'm going to have some fun down in South America. Now, turning to some more important things, we've seen some really interesting things happen in the markets during this week. We saw gold go up and come down, and it wasn't too unexpected. I think it got a little bit overbought. The relative price was about 1.25 times its 200-day moving average. That's where you take the current price divided by the 200-day moving average to get a relative price, and that's quite outside of the normal trading bands. So while not outside the third standard deviation, it's still relatively overbought. And so we need a period of consolidation, and we need a little bit of a correction right now to lay the groundwork for a further rise, even up to the $1,300 level in the second quarter. So that's what I'm looking for to have happen in December. And you'll notice from my articles that I recommended put options. Hopefully people had some put options and were able to lock in some of their gains and hold on to a little bit of that. There's also been quite a bit of rumor mongering with regard to tungsten in London good delivery bars, and I've gotten a few comments on the website about it, and I'm grateful for the comments and grateful for the questions. I've even received a few emails about it, my thoughts on it. And, to be honest, I kind of think it's sort of nonsense. First, tungsten could be used in fakes. I mean, that's, I agree with that. However, it's pretty unlikely. One of the reasons is that the melting points are so different. Gold melts at 1,064 degrees Celsius, tungsten at 3,422 degrees Celsius. When it cools, gold is soft and relatively malleable, while tungsten is brittle. So if there were to be tungsten fakes in the London good delivery bars, I think they would be pretty quickly identified. One of the reasons would be if any of these bars were dropped, for example, or melted down to be used for industrial purposes, which you don't necessarily find with gold. But either way, I think it would be discovered, especially if it's on the scale of, over 1 million bars, like one of the articles suggested that many had been faked. Of course, if these bars were taken and put in Fort Knox or the GLD ETF or whatnot, then perhaps we wouldn't discover them for the reasons of, Fort Knox hasn't been audited in 60 years, and if you've read my 2 articles and watched the videos where I go line by line through the prospectus of the GLD ETF, you'd understand that they don't confirm neither the fineness nor the quality of the gold in the prospectus. So, I guess they could take tungsten and say it's gold and stick it in the vault. But if they're going to be engaged in a fraud like that, why not just take paper and stick it in the gold and say stick it in the vault and say it's gold, which I think is more likely. Anyways, now one of the other reasons I think that this raises quite a bit of red flags is that the language used in the actual articles that I read seemed to imply that the person didn't understand what's going on in the market. Like they're just making stuff up. And for example, the LBMA is a trade association. It's not an exchange and it's not a market itself. What it does as a trade association is it sets standards for the bars that are traded among members within that trade association. So you'll get miners or refiners or bullion banks or vaulting companies, and they'll apply to become members of the trade association. And once they're granted provisional status, then they're given full status, and there are very few members in this LBMA association. But it's the big boys. You got the bullion banks, J.P. Morgan, Deutsche Bank, Goldman Sachs. You got some of these bullion banks that are in there, and then you've got the refiners. Metalor, Kitco. There are quite a bit of refiners in there, and then you've got the vaulting companies, and there's Brinks and Viamat, and those are the only two vaulting companies. Now, how it works is you have these London Good Delivery bars, and there's a chain of integrity that shows who has had possession of that bar at all times. And if you take the bar out of that chain of integrity, then it loses about 5 to 7% of its value because it no longer has that pedigree of who's held it. And one of the reasons that is important is because the previous members indemnify people if those bars aren't what they said they were. If they're not a certain amount of gold, of a certain fineness, of a certain weight. And so if we've got, if there are tungsten bars floating around in the chain of integrity and in the chain of custody, then the other association members have every incentive to say, no, this is not a London Good Delivery bar. This is tungsten bar. You have to pay me for a gold bar. You need to indemnify me. So we've got that to deal with. Because the LBMA is not an exchange or a market, these transactions take place privately. So you'll get someone buying a gold bar directly from the miner, from the refinery. For example, Deutsche Bank will buy a gold bar directly from Metalor, and they'll do it at the fixed price that's found on the LBMA, but the transaction will take place between those two parties. And what happens when it takes place there is that you actually have an OTC forward. So you have a spot price, which is, I'll give you $5 and you give me the gold today. Then you have a forward, which is the private agreement between the two, and then you can have actually an option on those forwards. But as far as futures go, there are no futures in the LBMA Trade Association because it's not an exchange. And the same thing with the London Metals Exchange. The London Metals Exchange deals with base metals. It doesn't deal with gold. And so in these articles talking about the tungsten in the LBMA bars, they're talking about futures contracts on the LBMA, and they're talking about the bars making their way into the LME, and it's just a whole bunch of hogwash. I'm the first one, to say, hey, some of this gold out there might not be actual gold, but at the same time, I back it up with very meticulous work, line by line in the prospectus, or when we had the LBMA forwards being settled with CME port-cleared futures in exchange for physicals that are then settled with GLT shares. I showed exactly where all the rules are, where that's causing that. And this article had none of that. No research, no backing up anything, just a bunch of wild claims, no real analysis of any degree, and then conclusory statements. So, show me some real stuff that's happening and some real evidence, and then we might take this a little bit more seriously. It's not like most of GATA's work that is impeccably documented, where you're able to see where the stuff's going. This tungsten issue is just a bunch of nonsense, in my opinion. Not to say that it might not be something legitimate in the future, but with the evidence and the quality of research that has been performed to date, I find it lacking. And I would love to see some evidence on the issue, because that would really throw a monkey wrench in the gold market and drive the price up quite a bit more, because people would be checking the quality of their bars and things like that, which would probably be a good thing. It'd keep everybody honest in the system. And I think that the LBMA members already have every reason to be honest in the system, because they have to indemnify the people who had the bar before them. So anyways, that's a little bit of talking on the tungsten issue, and I hope that it helps illuminate that. As far as the gold and silver prices, I think, as talked about, we'll see a correction and consolidation here, and then it'll move up quite a bit in January, February, March. As far as I've had a lot of people, a lot of friends, and friends of friends talk to me. They want to buy gold now. I think gold's starting to enter this stage too. And fortunately, for those of you who listen to the podcast and follow my writings, you'll notice that I've really started looking at platinum. And I like platinum because it's so rare. I mean, there's only $7.5 billion of platinum produced every year, which is a tremendously small amount relative to the cash balances that are out there. And with gold money, you can buy platinum. And the platinum that you get in your account comes off of the London bullion market. They have a bullion market for gold. They also have silver, platinum, and palladium. And so the platinum that you get, those bars, they conform to certain standards, just like the gold bars do. And if you're still at all worried about the tungsten issue, which I think is not an issue if you have LBMA gold through something like gold money, but if you have any reservations at all, well, just switch your gold balances into platinum or into silver, because the platinum, for example, is mainly an industrial metal, which means that those bars are being melted down on a regular basis to be used in industrial applications, which you cannot necessarily say for gold. And so if you get platinum bars off the LBMA, there's a very, very high degree of probability that if there were any type of fake platinum bars or fake silver bars, silver also being an industrial metal, that it would be very quickly discovered. So, I think that the tungsten issue for gold is nonsense, given the current evidence and information that's been provided. But if you still have reservations, just switch into platinum. And actually, I think there's quite a bit of upside for platinum to still be realized. I recommended it at $1,118 an ounce a few months ago, back in, maybe it's July now, and it hit $1,518, so $400 an ounce, nearly a 50%, about 30% rise, and it's actually fallen back down to $1,439. So I think platinum looks like, I think it's a great deal. So I just keep buying it, keep buying lots and lots of it, actually. So that's a little bit about what I'm doing. Anyways, this has been the 59th episode of the RunToGold.com podcast. Some musings on what I'll be doing this holiday season, and I hope the best for all of you.
Hi, this is Jim Willie from the Hat Trick Letter, found on www.goldenjackass.com. And you are listening to Run to Gold.